What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to discuss real estate investment trusts, or REITs. These are some that I own. And you look at occupancy rate, revenue, of course, funds for operation is important. I'm not going to go over that. They have pretty good FFO trends. But the most important thing about REITs, I'm an income investor and dividend growth investor. I'm like a hybrid. So I like the income. Now, the problem with REITs, you got to pay, well, taxes. I'll have your tax advisor go over that with you, but you have to report it pretty much as regular income. So the one thing with the negative is REITs, you don't get the dividend deduction on it. You can correct me if I'm wrong, but that's what goes on with REITs. But if you're an income investor like myself, I love them. I buy them. I own them. They have pretty decent dividend growth, and their revenue trends have kept me as a long-term holder. That's the best way to say it, or somebody that can rely on them. The reliability's there for passive income. And of course, I reinvest it into buying other dividend growth stocks or dividend stocks. So love the passive income that I earn from them, and I need to get more shares. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out some of the REITs to buy for November right now. First one I want to go over is NNN. It's a triple net lease REIT. And the one thing that's nice with them is that they're not doing too hot against the S&P 500 right now. That has me attracted to them because, again, I'm an income investor. And with my IRA, I want to beat the S&P 500 or keep in line with the S&P 500 or invest in an S&P 500 ETF or growth S&P 500 ETF. But I invest in NNN for the income and the passive income. So it's a high yielder. That's one thing that's nice. It has a 5.35% dividend yield. Now, remember, you shouldn't care about PE ratio when it comes to REITs. Don't care about it. You should care about the funds for operation. So let's go over NNN real quick. So some nice news on NNNREIT.com. They're very transparent with their news and with investor relations. Recently, they announced a third quarter 2024 results. FFO, core FFO, and AFFO were 84 cents per share, and AFFO was 84 cents per share. FFO and core FFO increased 3.7% over the prior year, and the occupancy rate was 99.3%. That is good. 113.6 million in property investments, and the initial cap rate of 7.6%. So yes, the FFO was good, okay? But go over the revenue trends. I'm going to just show you geographically how big they are before I go over revenue trends. So right now, we have 380 tenants, 3,549 properties. Now, I always say this, bigger is better. Now look at Medical Properties Trust, 400 some versus 3,549. And NNN is more diversified versus specific. So some of their portfolio, the top lines of their trade, I'm going over on their website, 16.8% automotive, 15.9% convenience stores, 8.4% restaurants, okay? So just some of the big properties, okay? 7-Eleven, 146 properties. Mr. Car Wash, and I always said this, that there's like an arms race to be a, basically to be a landowner for these car washes in a REIT. Camping World, Dave & Buster's 32, GPM Investments, Flint Restaurant Group, that's Taco Bell's and Arby's, 204, LA Fitness 26, and they don't have a lot of AMC theaters. I am happy about that. So that's one thing that's nice. I'm going to jump to the revenue trends. And again, if I don't see revenue trends going up, I'm not attracted to them. And if you watch my previous video in AGNC, why I'm turned off, their revenue trends aren't very consistent. Now, I'm going to go over annual data in millions US dollars. 2013, 393, 2014, 434, 2015, 462, 2016, 533, 2017, 584, 2018, 622, 2019, 670, 2020 660, 2021 726, 2022 773, 2023 848. So you're getting some consistency. Now let's go to the dividend growth. I'm going to explain something to you. This is why I'm a hybrid income investor and dividend growth investor. So the dividend growth and income stocks or high yield dividend stocks are not that high compared to some of the dividend growth stocks like Lowe's or Home Depot that I own. I'm going to have a future video on some of these dividend growth stocks that are quite attractive. So let's look at 2014, 41 cents to 42 cents, and then 2015, 44 cents, 2016, 46 cents, 2017, 48 cents. This is a quarterly dividend. 2018, 50 cents, 2019, 52 cents, and then 2021, 53 cents to 2022, 55 cents, and then in 2023, 57 cents, then in 2024, 58 cents. So yes, you're going to see normally a high payout ratio with REITs. Remember, 90% of what they make go back to investors. The dividend increases in the last 5 years is 5. Dividend growth in 5 years, 2.56. So if you bought one share, you made $2.32 with a 5.35% dividend yield. So I just want you to be aware of that. Yes, the dividend growth is not that good, but again, I love the income with NNN. So I've been buying more, reinvesting its dividends, and seeing what M1 Finance will distribute with the dividends so that I can get more shares of NNN. So let's check out the next REIT. Here's another REIT that has been very attractive for me. WP Carey sitting at 55.12. So the thing about WP Carey, it's been since 1973. So some things are very attractive with it. And of course, it being down, and I told you in the past 2 years, I've been going heavy into REITs, BDCs, and dividend growth stocks. But what I like about WP Carey, it does have a well-diversified portfolio, which I'll go over. But, I'm there for the income with WP Carey. I'm not there for, putting it in an IRA and basically increasing my net worth. That's fine. My net worth, I can worry about my 401k IRA. Yes, my portfolio, I'm up a high percentage, but right now, since it's down, I kind of like do a little bit of value investing too and income investing. I'm going in. Okay. I love going with the decrease of prices. Hasn't really recovered since the pandemic, which is attractive to me. REITs have not recovered since the pandemic, and that's why I've been going heavy after them. So let's go to WP Carey, their website. So again, with their portfolio, okay, they have 1,430 net lease properties. Their occupancy rate is 98.8%. Rent escalations 99.6%, and 346 tenants. So well diversified, pretty strong. And again, the occupancy rate is still pretty high. That increases my confidence with them. So, some of the things that we need to also look at is who are they landlord to? So geographically, they're in 58.6% in the United States, 35.7% in Europe, and other 5.7%. So their tenant industries are retail stores, consumer services, beverage or food and beverage, automotive, grocery, healthcare and pharmaceuticals, packaging and glass. Properties are 35.3% industrial, 28.2% warehouse, 21.8% retail, and other 14.7%. So their top 10 tenants: Extra Space Storage, Apotex Pharmaceutical Holdings, Metro Cash and Carry Helweg, Terra Nova Group, OBI Group, ABC Technologies, Nord Angola Education. So again, their map, they're geographically, I mean, you look at the United States and you look in Europe, I mean, they're pretty strong right now and they're big. So bigger is better. Now let's go to their revenue trends. I'm going to skip FFO. I'm going to just go to revenue trends. So the revenue has increased over time. So I'm going to start in 2014, 908. The year before that, it was 489. So there is an increase. This is annually in millions US dollars. 2015, 938. 2016, 941. 2017, a little bit of a drop, 848. And then 2018, 885. 2019, this is when they start rolling. 1,232. 2020, 1,209. I would blame the pandemic. 2021, 1,331, 2022, 1,479, 2023, 1,741. So they had to focus on mostly their triple net lease or their net lease properties. And I think that was a huge factor with them. And you can correct me if I'm wrong. They kind of branched off with their commercial real estate or office space real estate, if you want to say, and they kind of focused on their principal. So again, you can correct me if I'm wrong, but that's what they did, and things are looking pretty strong. So them saying bye-bye to the other stuff and focusing on their principals really helped them. And I'm going to show you their dividend history. So things were good, and then things were bad, and then things were good again. So 2012, again, quarterly dividend, 57 cents to 65 cents, 66 cents, 2013, 82 cents, 84 cents, 86, 87, 90 cents in 2014, then in 2014, 94 cents, 95 cents, 96 cents, and then 97 cents, and then 98 cents in 2016. Then they cracked 101 in 2017, then 2018, 102, then 103 in 2019. Things were looking good, and then 2020, 104. And then in 2021, 105, and in 2022, 106, 2023, 107. And then they made their decision to say bye-bye to the other, you want to say, office section, okay? You know, people that are going in the offices or the, you know, looking at, I'm just trying to make this very simplified, that the commercial real estate is kind of pushed off aside, and they said, all right, you guys do your thing, we're going to do our thing. So now the dividend is starting to come up, 86 cents, 87 cents, 88 cents. Trying to make it as simplified as possible for a lot of you guys that are new. I don't like to try to go in depth. I try to simplify things. You know, even being a nurse practitioner, just trying to explain to my patients the most basic ways or how these meds work or why you're taking meds. So I try to make it very simplified because a lot of people are very technical, and I just try to make this very, very basic and just show you my dividend investing strategies and what I do to make passive income. So the dividend increases in the last 5 years is 20. I just went over the dividend trends, negative 3.24%. So if you bought one share, you made $3.50 with a 6.35% dividend yield. So the occupancy rate and revenue still has me attracted to them, and I told you I was going to sell them and rebuy them. I've been rebuying them. So there's your answer. So let's jump to the final dividend stock. So this self-storage REIT, CubeSmart, you'll probably see them all off the highway. I tell you what, you know, being an investor and investing in CubeSmart, I'm driving on the highway. It's almost, I point at CubeSmart like, yeah, I own you. I love them. They are doing very well. 47.33 right now. So right now they have 600 plus self-storage properties in 24 states. So the one thing is, again, people are still trying to get houses, and then you're in an apartment, you have all this extra stuff. Sometimes you need to store it. So you need to store this stuff, and they make money from that. So, you know, being a real estate investment trust that invests in self-storage facilities in the United States, it's a little diversified. It's a little specific, and it has a 4.31% dividend yield. So I'm going to jump to the revenue trends and dividend history. You know what? I love doing these videos for you guys. So before I even go over the revenue trends, if you're new to this channel, make sure you subscribe and hit the notification bell. I don't feel rushed anymore to do these videos because I'm not in nurse practitioner school anymore. I'm not studying for boards. I can relax and make more videos. Kind of do speed runs like this for you guys too. So love doing these videos and showing you guys my passive income journey and dividend investing journey. And I provide my rationales for entertainment purposes why I invest in these type of REITs. And if you watch my previous video with what I've earned this past month, it's paying dividends, if you know what I mean. So annually in millions US dollars, 2014, 376, 2015, 444, 2016, 510, 2017, 558, 2018, 597, 2019, 643, 2020, 679, 2021, 802, 2022, 1009, 2023, 1050. So look at the increase from annually in millions US dollars from 2014, which is 376, to 2023 to 1050. So try talking a million miles per hour and going from there. So again, the revenue trends have gone up, and now I'm going to jump to my dividend history. I'm sorry, the dividend history of CubeSmart. If you want to talk about powerful dividend growth, this is one that's very impressive. So 2015, quarterly, 16 cents. 2016, 21 cents. 2017, 27 cents. 2018, 30 cents. 2019, 32 cents. 2020, 33 cents. 2021, 34 cents. 2022, 43 cents. 2023, 49 cents. 2024, 51 cents. So that's a huge increase. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 12.63%. If you bought one share, you made 204 with a 4.31% dividend yield. Yes, I own all 3 of these REITs. I'm going to continue to buy them. These are some of the hottest REITs right now. I'm going to say CubeSmart is probably the hottest one. And you get a good bang for your buck with dividend growth. 5 years at 12.63%. Symbols Cube, WPC for WP Carey, and NNN for NNN REIT. So that's what I love about having a diversified portfolio of income and dividend growth. I can rely on these high income REITs because the revenue trends are good, the occupancy rate is good, and CubeSmart is just generating revenue like crazy and expanding. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And I'm going to jump to my disclaimer and go Browns. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice. My YouTube channel should be just for entertainment purposes only. I'm going to tell you, don't use this channel as a reference for financial advice or any form of investing advice or tax advice. I'm just told you a million times, and I have it in my disclaimer comments, and you don't have to buy these because I buy these. This is my passive income journey, my dividend investing journey. So you have to be aware when you make investments, you can lose money. You can gain money, you can lose money. So you have to do your due diligence, make smart economic decisions as well. Take care and have a good one.